Everyone, today is Monday, September 20th, 2010. We had more follow through to the upside today as this market has been breaking some downtrend lines that we've been observing. And, we broke this downtrend line last week. The week before, we had broken pretty much the one that took us from the highs of the year to the mid August lows. But the one that seemed most relevant was the one that had broke last Monday on that gap higher. Now, today, we've broken past that horizontal resistance, which has been really the important level of resistance from a standpoint of the last 4 months while we've been in this range that we've been talking about, which is basically outside of a few days been 104.5 up to 113.25. Now, just as we had seen the market break down and then recover quickly, there's always the possibility the market could break out and then get back into that range quickly again as well. So there's no guarantee that the market's going to continue to follow through to the upside here, but it's been bullish for the last couple weeks, and we've been observing that this market has been making a real nice steady pattern of higher highs and higher lows above that rising 5-day moving average. Last week we got down to on Friday, that is, we broke that trend line that we had been observing here briefly, and it turned it a little bit more neutral. And the thing is, when we have a stage 2 uptrend, we don't know till after the fact if this is stage 3 distribution, which leads to a decline, or if it's consolidation that breaks out and puts the market higher. So from today's standpoint, we had a gap higher. The market consolidated a little bit, and as it got back above that volume weighted average price after this little shakeout here, and we touched upon it again, and then really exploded higher, and we were above that volume weighted average price all day long. So back to the daily time frame, we want to see now that 113 would basically be our support going forward. The next potential levels of resistance that we would encounter for as far as where we might find some selling are right at about 115, and then right up here at about 117 or about 118, 1890 or so. That's just kind of eyeballing those levels. But the trend is higher. It is extended, and as I've been saying, just being extended isn't a reason to sell short. We only want to sell short when we have a pattern of lower highs and lower lows below a declining 5-day moving average, and then be alert for reversals and protect ourselves with stops. The biggest level will continue to be 112.10 or so for support this week, but we want to see now that about 113.20 or so is the area that holds as support. So looking at the weekly time frame, we can now look at this and say, well, do we have confirmation of this inverted head and shoulders pattern? Well, textbook wise, yeah, we do, but it doesn't guarantee that we will continue to move higher. We always have to be alert that patterns do fail. This is a longer term pattern on the weekly time frame, but it is impressive that this market has broken on the weekly time frame that pattern of lower highs and lower lows, and now with this higher low at 104.5 and this higher high here on the weekly time frame, we're back in this uptrend here. Now, it doesn't mean it's going to be nice and neat and simple return to the highs or the height of this head, which is what we would use in traditional technical analysis, is take the height of the pattern, add it to the breakout point, and that would give us a price objective up near 125. It could happen. Let's just take it one move at a time, basically, and continue to focus and concentrate on, can this market hold this prior resistance level at 113.10, and if so, then it remains innocent until proven guilty on the intermediate term. If it was to break down back into this range, we would be more concerned about a bigger breakdown below 112, and that could possibly bring us down towards a test of the 50-day moving average. Right now, that seems highly unlikely, but it's worth pointing out. We've got great leadership from the IYR. This is the commercial real estate index. This was the second shoe that was going to drop for years, but it's continuing to rally up towards that $60 level, it looks like. And even the financials are right back up to that 200-day moving average, and breaking the 1510 level would, I think, bring some more people maybe back into this market who've been short the financials. The NASDAQ, for its part, is really impressive in terms of it keeps breaking these prior peaks, and now it's looking like we're headed for a test of the mid-April lows near about 49.20, and it's certainly extended though, so you have to be very careful about buying up in here. But as long as this pattern of higher highs and higher lows continues, you want to give it the benefit of the doubt, especially while we're above the rising 5-day moving average. Trying to pick a top is a fool's game, in my opinion. But if we do pull back and we begin to distribute underneath that declining 5-day moving average, if we were to see that, that is, similar to what we had seen back in here, then you would want to look at becoming a lot more defensive. Right now, the market is saying the buyers are in control. We have strong participation from many groups, and you give it the benefit of the doubt till it proves otherwise.